Your lesson number 4 from a series of paper 1 type, and we are discussing your specimen paper 2020, and from question number 16 to 20 we will discuss in this slide. So my name is Masuood Ahmad, and my ID at Skype and WhatsApp is given to you, so you can contact me over there as well. So let's see the question number 16. From which non-current asset is the revaluation method of depreciation most appropriate? As you know that boys, one method cannot be applied to each and every type of assets. So it is the type of assets which give us the clue that which method should be applied on that particular asset. For example, age, deterioration, depletion, and the value and the estimation of other factors. These all things basically give us a clue how to use depreciation method. So as far as revaluation method is concerned, it is used on the assets which have small items are there, so many articles are there, but the value of each article is low, but in total the amount is a considerable amount. So I guess you got the idea. Here comes your answer, that is loose shoes. Loose shoes, we have to use revaluation method on this. For motor vehicles and office equipment, normally we use even on plant and machinery we use reducing balance method, and if it is in case of furniture or building we use normally straight line method. So let's see question number 17. 17 is Ahmad depreciates his building at a rate of 2% and per annum using the straight line method. See, buildings are depreciated on straight line method. So he used to depreciate 2%. He bought a land 200,000. As you know that land is not subject to depreciation. So that is the only asset which cannot be depreciated. It cost 120,000 to build a warehouse on it. So it is your building. So building cost is 120,000. After 5 years, he sold the warehouse at 299,000, including land. Warehouse is sold to someone, and we have to find it out that whether he has any profit or loss. See boys, for every year 2% of 120,000, that is 2,400 for 1 year, and for 5 years how much amount is there? You have to deduct this amount from the total value of asset. For 320,000 is your total cost of your asset, and you have to deduct 5 times 5 years depreciation, 2,400 each year. So all amount should be deducted, and you will arrive at net book value, and you have to compare the amount for which you have sold and the net book value. That will give you profit or loss. So make this calculation and see what is your answer. So here your answer, that is 9,000 loss. Okay boys, next question. Why should accrued expenses be shown in the financial statement of business? Why accrued expenses? Accrued expenses mean the expenses you have to pay. Okay, so why we show them in our statement financial position? Because they relate to this period, but we have not paid yet. So question answer option number 1 is so that the correct total of current asset is shown in the statement financial position. By the way, accrued expenses are not our current assets, so there is no question of option A. So that the total income of a period is matched against the total cost of that period. So accrual, you know that accrued expenses or accrued incomes, they are made, the adjustment is made due to the concept of matching principle. And C option is how to show how much customers owed the business. So there isn't any question of customers, how much the amount owed to credit supplier. It's also not the case. So you got the answer, that is B. B is so. Question number 19. A trader sold goods to Zahid on credit. Z was unable to pay the amount owing and the balance on his account was written off. So trader, you are the trader, and which entry will you make after at the time of writing of this? Because Z is your debtor and you are going to, that is your asset and you are decreasing asset, so you should credit your Z account, and irrecoverable bad debt is your bad debts are your expense whenever they increase you use double entry system, and here comes your answer, that is irrecoverable bad debts or simply bad debts account debit, and Zahid irrecoverable or Zahid is credited. I guess there's a little problem in your slide. So here on credit side only Zahid is not Zahid irrecoverable. Okay, so let's see the next question. S maintains a position for doubtful debt at the rate of, that is provision, provision, not position. So S maintains a provision for doubtful debt at the rate of 5% on trade receivable at the end of each financial year. On 1st January 16, the trade receivable amounting to that is the opening value of your current assets. Okay, trade receivable, that is 35, and the provision for doubtful debt was $175. So it reflects your 5% of 3500. So the question is, the income statement for the year ended 31st December 2016 was debited with 15 for the provision for doubtful debt. So boys, here we only the increased portion of provision. So you have to know, you have to find it out that what is your closing provision balance. If previously you had 175 in that provision, and additionally $15 is been also credited over there, which is basically debited to income statement. So in provision account now you have 175 plus 15. How much did the trade receivable owe on 31st December? We have to find it out. So it is very interesting question. How you can find it out? So simple question is, you have to divide 190 divided by 5%, and that is basically grossing a formula, and you will come to know the exact amount. So here comes your answer, that is 3800. So boys, if you have any problem, please do contact me on my WhatsApp number or Skype number. I will answer you over there. Okay boys, till then, Allah Hafiz.